Bank is the next one we will focus on, right? Third quarter numbers, net interest margins came in at 3.18% compared to 3.06% sequentially. Asset quality remained strong. We have Harsh Dugar, Executive Director of Federal Bank, now joining in. Harsh, good morning. Great to have you with us here. Prashant this side. And I think this is the first chat in 2026, so wishing you the best for the year, you and your team. And of course, I mean, this is a big one in terms of news developments as well, right? Apart from the numbers on a quarter-on-quarter basis, you've got a new strategic partner, and I think there's a fair bit which is happening across the bank. So let me just flip our conversation today. We start with the numbers and the guidance, etc. Let me just get the strategy part out, if you will allow it, and then we'll circle back to the numbers, because I think the numbers are, in a way, well understood, Mr. Dugar. So, start with the wealth management piece, Mr. Dugar, at Federal Bank. What's happening? What's the rate of growth which you're seeing there? It's a highly profitable segment across entities that we speak with. Any sort of inorganic opportunities that you see in that segment? Will we hear something on that? So just talk to us about the wealth side to begin this conversation.
Good morning, Prashant, and thank you so much. Wishing you and the viewers a very happy new year. Yeah, let me just start off with just giving a little bit of a broad headline numbers. I mean, the quarter has been good on many fronts. We have had the best ever NII, the best ever operating profit, and the best ever fee income. And apart from that, even the asset quality has stood out with GNPA and NPA both remaining at a decadal best. Three things which I would like to say, which is not on the numbers part. One is obviously Blackstone coming in with the intent to invest 9.99% stake in our bank, totaling to about 6,196 crores. We have got the board approvals and we have got the shareholders approval, NCCI. So that is one part. The second one is we increased our stake in our partner, Aegis Federal, on the insurance company to 30%. And we did a brand refresh with Vidya Balan, and we did a brand which is now both has a freshness and familiarity to it. So these are the three broad things which I wanted to cover on the quarter which went by. Coming specifically to your question on wealth part of it, we had guided sometime last year during the analyst meet that wealth will remain as one of the key focus areas, and their inorganic growth in general will remain an integral part of our strategy going forward in many areas, like maybe microfinance, maybe wealth, affordable housing, likewise custody. There are many other areas which we would like to grow, both organically as well as inorganically. It will obviously depend on the price. It will depend on the fitment is what we are looking at. Even organically speaking, wealth is something which we are looking to grow significantly in the years to go ahead. And we are looking at the segment which is the mass affluent. This is the segment and this is strategy for the bank.
Mass affluent. So, I mean, you've got Mr. Somvanshi there heading the business as well. So you were in the market, you're confirming, for acquisitions on this side? I mean, it'll depend on the price and fit, as you said. But that will be the fastest way to ramp up this business?
So, like I mentioned, that at the right price and the right fitment, we are always open to evaluating things. In fact, at any point in time, we would be evaluating multiple things. And at an appropriate time, because in these kind of cases, until the deal happens, you really never know. So the hit rate can be as low as 10%. But we are in the market in terms of segments which you would like to grow, which I just outlined right now.
Yeah. On the so that's the wealth side. On the remittance side, right? You've got about a 20% market share in remittances. You've had another transaction, lots of transactions actually, but the Emirates RBL transaction, and there as well. I mean, I spoke with the CEO of RBL, and they've got aggressive plans to gain a larger share as far as the remittance market is concerned. Could you talk to us a little bit about what you're doing here? And what's your share currently? What are aspirations on this side?
You look at it, we have always remained focused on the remittance businesses. In the last 2 quarters, the Q3 data is yet to come out, but even in Q3 data, we feel we have gained market share. So we've been steadily gaining market share over here at above 20% right now, if I look at the Q3 numbers. Yes, competition will definitely heat up. There was something which was there even earlier also. You will have more banks kind of coming in, but a couple of things which we are looking at. We are reasonably well entrenched in this business. We are increasing the number of partners we engage with. We are introducing technology so that it gives customer convenience. Apart from that, we're increasing the corridors of remittances coming into India. Middle East, Kerala was the largest corridor for us. It still remains, but the share of the same has been coming down. So Middle East to rest of India and rest of the world to rest of India is the segment which we're looking at. So this will remain a key focus area for us, and we're looking to increase our market share as well.
Any roadmap here in terms of numbers, share of the market?
See, we are already 20% plus. So typically maintaining market share 20% plus. And when you have 1.25, 1.3% market share in the deposits and advances, I would think we are pulling well beyond our weight. So we hope to maintain and grow this share.
You know, Mr. Dugar, you earlier mentioned about a return on assets target of, I think, 1.4% to 1.4 to 2.2% by FY28. Could you, we have seen ROAs perk up in the last 2 quarters. Given the pace, it looks like you'd be about 1.5% this year itself. Possible?
So, Prashant, you're not giving guidance for that number. What I can tell you, there are 2-3 things which are playing out, obviously. Many of the things which we are doing, before I speak on the ROA, let me take a step back and speak about the NIM. On the NIM front, we have actually managed to increase our NIM QOQ by 12 basis points and are almost at the pre-December levels where we were, the pre-repo cut levels, which is honestly heartening because it has come as a function of 2 things. One, on the deposit side, our CASA ratio has actually improved YoY by more than 2%, and that's almost like bucking the industry trend. We're 32% plus. Secondly, on the yield mix, we are shifting more towards the medium yielding assets, which has resulted in a good asset mix, which resulted eventually in a 12 basis points growth in the NIM. Coming down to ROA, obviously it's a function of a couple of other things. We do hope, and we are looking to grow the ROA and the NIM quarter on quarter. But let me also caution you, there are 2-3 things which we need to watch out for. One is a repo cut, which may happen. I'm not saying it's, well, the inflation concerns are there and geopolitical tension are also there, but we are. So I wouldn't like to guide you immediately for the quarter ahead, but for the medium to long-term basis, if you look at it, the trajectory for both NIM and ROA is upwards, and we look to gain about 5-10 basis points every year.
Okay, 5-10 basis points of NIM expansion every year over the medium to long term. Morning, Mr. Dugar, this is Rima here. Now, gold has been a big growth driver for many NBFCs and banks. Now, you've got a smaller share here. Are you looking to get a little more aggressive in gold? And do you have any sort of targets in terms of what portfolio you would like to capture, what kind of growth contribution it would have to your bank?
So gold is, in fact, if you look at among the private sector bank, we're the largest player in the gold piece. While I do agree, if you look at the numbers, the QOQ number shows a 9% growth. But let me just highlight a few things over here. We were also in wholesale lending of gold, which involved repledge, which as per regulatory requirements is not required, cannot be done. So we have actually taken a cut over there and degrown that portfolio, which is required as per regulations as well. If I were to eliminate that and look at the pure growth and retail growth, we've grown about 19 to 20% YoY. And I do see, and I'll tell you the reasons why I'm very optimistic on the gold front. One, the regulations announced by RBI provides a level playing field for all players in this. That's one. Secondly, they have consolidated all the surplus into one, which removes ambiguity and interpretation issues by all players. And the third, they have also introduced newer products, income generating, which allows greater leeway to banks like us, who are already well entrenched in this business, to roll out more products to suit the customer requirements. So we are quite bullish and keen to grow our gold business.
Mr. Dugar, we leave the conversation here out of time. Thank you very much for joining in.